Hey guys, good afternoon, everybody. Today is Monday, December 30th. It is at 2 o'clock right now. Our scheduled mentoring session's for 2 o'clock. So I'm going to go ahead and set up this room real quick and we'll get started shortly with our mentoring session for today. Today's day 5 of the mentoring session. We're finally coming to an end and we're going to wrap everything up here with all of the last modules of our mastery class. So few things here to update and we'll be good to go shortly. Looks good. So let me get this link sent out to you guys here in the premium. Well, since we did a go. This link sent out. So I'll give it some time for people to make their way in. I'm gonna go ahead and send this email out as well. And then all right, so we'll get a few more moments for people to make their way in. Good afternoon, everybody. Today is Monday, December 30th. It is 2:03 right now. Our scheduled mentoring session is for 2 o'clock. Today's day 5 of the mastery class. So we'll be covering the last modules of the course, and we'll cover things ranging from risk management to trade psychology and how to trade like a business. So we'll be doing that very shortly. Looks like people are still making their way in, so get a few more moments. If you guys have any questions, feel free to put them in the chat. We'll probably get to like the questions later. We're trying to knock out the modules first, and then we'll get through the questions like a little later in the session if there are any questions. Otherwise, yeah, again, for today, we're going to be covering modules. So we'll start with module 8, which is risk management. I'll be discussing the contract size breakdown for YM. I'll show you guys ways to calculate your risk on TradingView. It's going to be a lot easier to do it that way, but I'll show you the equation if you guys want to do it by hand. Also, we'll cover trade psychology, basically the main issues traders run into. And then we're going to go down to module 11, and I'll explain how to trade like a business, meaning, how to set up the company, depending on where you're located, what you can write off, what you can deduct, the benefits of trading as a business and treating trading like a business. So I'll get a few more moments for people to make their way. It looks like people are still joining a little last minute. But if you guys do have any questions that you guys want me to cover, feel free to put them into the chat. If we have time at the end of the session, I'll cover a couple of the strategies that I covered today. As you guys know, we covered, looks like I deleted everything off the chart, but like for the most part, main strategies applied for 2025. Basically, these are the main strategies that I'll be looking for. Looking to apply should be a V1 variation. B3 variation. Momentum reversal. I might change the name for momentum reversal because I mean, it is a momentum reversal, but it's more of like a momentum correction. I think momentum reversal is fine, but in the future, maybe I'll make some changes. But these are basically the main strategies that I will probably be looking to apply for 2025. Mainly because of the volatility and the choppiness that I'm expecting. I'm expecting a lot of directional push, but I'm also expecting a lot of choppiness. And these reversal strategies will be really good to apply as we move forward into the 2025 trading year. Once Trump goes in the house, I'm expecting more volatility to come in. I don't think it's going to be very consistent, but today was actually a really good day. If you guys saw how the market moved during the live session today, this is traditionally how market typically moves, right? Nice directional push to the downside, nice directional push to the upside. This is what market was before last summer. Once summer hit, we went into the fall, went to the winter. Market's kind of been like this lately, sideways. So, it is what it is. Whatever the market's giving you, you have to adapt with the market. Typically, I trade directional strategies. You guys can see that directional strategies did hit today, but not very many entries appeared. So, I mean, they came up here and there, but not very much. So. All right, looks like we're good to go. So if you guys have any questions, feel free to put them in the chat. Otherwise, again, I'll cover what we'll be going over today. So quick overview of what we'll be covering today, guys. We're going to start off with module 8, which is risk management. We'll go over contract size breakdown for YM. I'll show you how to calculate the risk, and I'll show you how to do it on TradingView, which is a lot easier. Next, we'll go to module 9. We'll cover trade psychology. We're going to go over the main issues that traders run into within their trading journey. And then we're going to go down to module 11. Module 10, if you guys want to look at it, these are just the replays for all the live trading sessions, mentoring sessions, and daily team profits. It's pretty self-explanatory. So we'll skim through this real quick, but for the most part, you guys will know exactly what to look for. There's nothing to really explain in this area. But module 11 is probably going to be the most important, how to trade like a business. So I'll be showing you how to trade like a business, how to start a business, an LLC, sole prop, S corp. Everyone's kind of different how you're going to be setting up. Ideally, you'd probably start off as an LLC. Once you make enough money, you'll start taxing yourself as an S corp. I'll show you basically the gist of how to set it up. If you want it to be done for you, that's a service that I'll be offering in 2025. I think, for a lot of people, they don't know how to set up a business. They want to do it properly the first time around. I'll offer a service, and we'll talk about that once we get to this module, where I'll do it for you. I'll give you the steps, so everything will be done properly for your first business. And then in the future, if you want to start another, you'll have the steps ready for you, so you can just do it yourself. And yeah, other than that, that's pretty much it. That's all of the course and we've covered pretty much everything over the past 5 weeks or so. So it's been a pretty good mastery class with everything, and I think we covered pretty much everything here step by step. So all right, let's get started with module 8. Yeah, and Lila said, awesome, because the IRS will get you. Yeah, that's really what it is. The thing is, once you start to make money trading, like your first step with trading is really how to make profit, right? Your second step with trading is how to keep that profit. And your third step is how to get the most tax benefits to keep profit overall. Because the thing is, you're going to make profits. Then you have to understand how to not give those profits back to the market. And then when you get to step 3, you have to understand how to take advantage of all the tax benefits that you can pretty much take advantage of, so that you don't have to pay as much in taxes at the end of the year. Because the thing is, trading is expensive. All of your expenses, for example, your subscription to TradingView, your subscription to Kodi Kai, your subscription to data, your subscription to whatever tools that you use, to your journal, to your evals, all that stuff is, you can write that stuff off. It's a deduction. But we'll go over that stuff more in detail once we get to module 11. So let's start with module 8. Module 8 is risk management. So this is what module 8 looks like. It's pretty self-explanatory. I mean, if you understand like basic math, so this is how you would calculate your risk associated with the specific contract size, profit target, and stop loss used when trading YM, which is the asset that we trade. There's going to be different values for different assets that you trade. If you're trading YM, this is what's going to apply. However, if you want to trade something like ES and Q, it's going to be slightly different, and I'll show you how to calculate that. So looking at this here, Basically, this is the equation. What you'll do is you'll put the contract size, and I'll just put this over here where it's more, you guys can see it a little better. So this is how you calculate equation for calculating risk trading YM. Okay, so this is the equation. It's not a super difficult equation. The way that you would do this basically is, and let me show you an example down here. So example. So say, for example, you're trading one contract times $5 times, we'll say 30 points, because that's like typically what we're aiming for and what we're risking. So if you guys see the equation right here, the equation is very simple. You're multiplying the contract size by $5, which is the point value of YM. So every time YM moves up 1 point or down 1 point, it's going to be $5. So you'll do the contract size if you're doing one contract. So one contract times 5, which is how much each point value is worth, times how many points you're looking to risk. So for example, if you're entering a position here, say for example, you entered a buy here, right? Your TP stop loss was 30-30. And you use this equation here. If you're doing one contract, you're doing one contract times 5 points times 30. And the math for that is 1 times 5 times 30, which is 150. That's how much you're going to be risking per trade. You're going to be risking 130 or 150 to make 150. So this is how to do it by hand. Typically, I wouldn't recommend to do it by hand. I still do it by hand because it's just easy for me. Like, it's like common sense. To just do it by hand. Like, for example, for me, I trade 6 contracts, right? So I trade 6 contracts times 5 times 30. So my risk and potential is about $900. That's how much I'm risking because I'm trading 6 contracts. So this is an example of how to do it. If you don't want to do it this way, it's completely fine. You know, I don't blame you. It's kind of tedious unless like you understand how to do it. The easier way to do this is you would just hit buy or sell right here. So you would hit buy or sell, and then you would put your take profit right here, your stop loss right here. And say, for example, you wanted to risk $500, right? Just say you wanted to risk $500. If you put 500 right here, your TP stop loss is 30, or typically we're doing like 60-30. So this is generally what it would look like. What you would do here is you would just set this up. Again, I'll show you from scratch. So if you want to determine how much you're risking and how many contracts you should use when determining your contract size, you'll just click buy or sell. It doesn't matter which direction. You'll go down here, check profit, check stop loss. You'll put your profit right here, which is going to be around like 60 points usually. If you want to do a 1-to-1, you can do that as well. So basically 30 if you're doing a 1-to-1. You'll put how much you're willing to risk here. So if you're willing to risk 500 per trade, you'll put 500 there. And then this is how much it's going to risk. So it'll tell you how many units to use, which is 3 contracts, and you can risk 450 to make 450. That's going to be your profit risk. If you want to do it by percentage, it'll show you percentage right here, but you'd have to put in your account size to determine that. For the most part, you just put your monetary value. That's probably the easiest way to do it, depending on your account size. If you want to do off risk, you can do that. You can put like 1%, but this isn't going to make sense because you're not going to take 1% risk on like an Apex account because like your max drawdown is like 3%. So it just wouldn't make sense. You have to do by monetary value. So if you guys have any questions regarding this, you know, feel free to let me know, but this is how you would calculate your risk. So again, I'll show you the same thing here. It doesn't matter if you click buy or sell. If you click sell right here, my TP stop loss is going to be 30-30. I'm looking to risk $1,000. My contract size is going to be 6 contracts. So if you're going to be entering this into your NinjaTrader, this is what your risk is going to be. This is how you'll calculate it. If you want to go, your take profit's not really going to matter. It's going to be your stop loss. So if you adjust your stop loss, like say for example, you want to go for the say you're going for the breakout, you want to use 50 contracts instead. You can see here that the number changes. It's no longer 6 units, it's now 4 units, which is 4 contracts. If you're looking to risk the same amount, $1,000. If you wanted to trade something like NQ, it'd be something different. So let's go to NQ real quick. And then I'll do the same thing here. I'll just click sell. And say you were going for 100 points here, right? This is how you would calculate your risk. So you're going for 100 point stop loss. Your risk, say for example, you wanted to risk 1,500 on this trade. It'll tell you right here, this is how many contracts you'll be using, 3 contracts. You'll be risking less, or you'll be risking just about the same amount, but it'll tell you exactly what contract size to use. If you want to use 500 risk, it'll tell you 1 contract. If you want to do 2,000 risk, it'll tell you 4 contracts. And it adjusts with you. So it doesn't matter which asset you're looking at. You can look at YM, you can look at ES, you can look at NQ. If you go to ES over here, same thing, right? If you want to trade the S&P mini or micro, you go here, same thing, take profit, stop loss. If you're doing a 100 TP stop loss and you want to risk $500, you put 500 there. I mean, you probably can't because it's your stop loss is too far out. You can't risk 500 on that. So let's say you want to do 1,000. I mean, you probably can't either because the thing's so far out. So it depends on what your account size is. So like, let's do this again. So let's just make it smaller. Let's do 20 points. 20. And now say you want to risk $500. It's like, okay, 2 contracts. So it doesn't matter which asset you want to use. I mean, each asset is going to be valued differently. So it kind of depends on like what you're trading. Again, I'm never going to use these because I don't trade these other assets. I mainly only trade YM. But if you want to trade anything else, like for example, if you wanted to trade gold for one day, like one day you're just like, well, I want to trade gold. You go to GC and you're not sure how much to risk, right? So you want to go for it about, we'll just say like a 50 point TP, 50 point stop loss. And then your risk over here, you want to risk $500. So if you want to risk $500, you'll put 500 there. It'll tell you how many units. If you want to risk more, like 2,000, it'll tell you 4 units. 4 units is 4 contracts. And it's pretty simple, pretty straightforward. And that's all you do. You basically put in your stop loss or TP, you put your risk here, it'll tell you what contract size to use. So you can use my equation here if you want to do it by hand, but it's so much easier to just do it through TradingView. Because it'll do the calculation for you. You'll see how much you're risking right here. And you don't have to go through the whole mess of trying to figure out what specific numbers to put in when you're doing the calculations. For YM, it's easy because the equation, again, like I said, it's very straightforward and very simple. It's contract size times 5 times how many points you're looking to aim for. So 1 contract times 5 times 30, it's 150 potential profit risk. If you guys have any questions regarding this, feel free to hop into the chat. Again, your risk is going to vary depending on like what you're trading with. If you're trading a personal account, I would risk maybe 1 to 5% per trade. If you're trading with Apex, you're going to have to risk a lot less. You're going to have to risk about like 1% or less because the risk is not very high. So for example, if you're trading a 300K account, which is what I trade with Apex, like the percentages just don't make sense with Apex because it's not going to calculate to like what you're in for. So like, for example, you have a $300,000 account, right? And then you divide that by 7,500, or sorry, 7,500 divided by 300,000. You can only risk 2.5%. So, you can't risk 1 to 5% per trade on Apex. You're going to have to go for like less than a percentage point. Because your max trailing drawdown is 7,500. Your max drawdown is going to be 2.5%. So you can't really do it by percentages with Apex. And that's why I was saying like it depends on like what you're trading. If you're trading with Apex, you probably have to go through monetary value. The way that I do it is my max drawdown is 7,500, right? So I divide that by five losses. So in order for me to blow my account, I have to lose 5 trades back to back. So my max risk per trade is 1,500. I'm usually risking this per day because I don't lose every day and I tend to win more than I lose. So this is my risk for Apex. If you guys want to use the same risk as me, it's very simple. Just figure out what your max trailing drawdown is. Whether it's 7,500, whether it's 5,000. Say, for example, if you're trading a 150K account. Your max drawdown is 5,000, right? Divide that by five. This is how much you should be risking per trade. If you want to be conservative, but also risky. Obviously, if you want to go smaller than that, you can. But for the most part, you don't want to go too small, especially if you're in the eval phase, because it'll take you forever to pass. You'll just never pass the challenge or the eval. It'll just take too long. So if you guys have any questions regarding risk management or the contract size breakdown, feel free to hop into the chat. I will answer whatever questions you guys have. But for the most part, I mean, risk management, it really just varies. Risk management is not based directly on your contract size or your stop loss. A lot of people, this is like the biggest like fallacy that I see with trading. A lot of people like to go for like huge RRs, right? You see people always, and it's always an Instagram guru. It's like someone that you see on Instagram or YouTube that's like I know I'm on YouTube, but like you'll see people who take trades like this, where their stop losses are super tight, and they go for these crazy Rs. This stuff is not realistic, guys. You're probably never gonna like see trades like that because if your stop loss is super tight, you're usually gonna get stopped out more than you're gonna hit your TP. The trades like this don't really happen very often, and people who do take trades like that, they have a very horrible win rate. So here's the thing, and I'll put this here too, like win rate versus RR, or risk to reward. Um, like basically the thing with win rate versus risk reward, and I'll put this right here. So win rate's risk reward. So if you have a low win rate, then you need to have a large RR. If you have a high win rate, then then large RR is not required. So here's the thing. This is like the argument with like a lot of people. Like when they see people who take like 1-to-1s or 1-to-2, like for me, I trade 1-to-1 or 1-to-2. That's because I have a high win rate. If you follow my trades, like all of my trades are pretty much documented from the whole year. So you can see over here from January, I had a 93% win rate. My RR here isn't super high. It's like negative for the most part. It's negative or it's 1-to-1, right? But I have a high win rate. So the thing is, and let me just show you. It's like hard to explain without showing you an example. So let's see. So if you have if you are trading 1-to-1 risk to reward, you only need more than 50% win ratio to be profitable, right? If you have a 1-to-2 risk to reward, you only need more than, I'm assuming it's 25%. Don't quote me on this. My math is horrible, but I'm assuming it's, see, and then when you start to go like, and then when you start to go like to the negative risk towards, so I'll put positive here so you guys can see the difference. And then if you go negative, 1-to, so 2-to-1, I wish I had a chart for this, but I don't have it right now. Um, Again, I don't know if these numbers are proper, but I'm just giving you guys an example. So here's the difference right here. Um, if you're doing a 1-to-1, I'm mainly between a 1-to-1 and a 1-to-2. These are like for my full TPs. Um, Otherwise, I'm doing like somewhat of a negative risk reward. So if you're doing a negative risk reward, you need to have a high win ratio. You need to have at least more than a 75% win ratio to be profitable. If you look at all my trades here, my win ratio is about like 93.3. Right here, it became down to 59.3 because I started doing a 1-to-1 here. Right here, I did a mix between 1-to-1 and negative. So I was at 72.2% win ratio. And you can see my win-loss ratio here it kind of fluctuates because I'm mixing trades. Some of them are going to be lower. Like you can see over here, the ones that are at like 10 points, those are negative risk reward. And then the other ones are the bigger TPs and bigger stop losses are 1-to-1 or 1-to-2. So if you go down my stats here, you can see that like my only month where I was negative was in May. And this was because I was at a 64.3% win ratio. It was like a small loss. It was like I was down 20 points. The thing with this here is like it goes back to what I just showed you guys. In order to be profitable, if you're doing a 1-to-1, you just need more than 50%. If you do 1-to-2, you need more than 25%. If you're doing negative, you need like more than a 75%. So if you look over here and you guys can see the numbers, basically like in January, I had a 93% win ratio, 140 points. February, I had a 59.3% win ratio. My win ratio wasn't super high, but it was a mix between breakouts, which were 1-to-1. And for the most part, it looks like I was only taking breakouts during this month of February. So the month of February, I took only breakouts. I had a profit of 125 points. My win-loss ratio was above 50%, so I was in profit. Same with March. I had a 72% win ratio, 200 points profit, taking mostly the breakouts here. And then you can see over here in April, I started mixing in the scalp skin. So between this period, my win ratio went up and my profit was actually less. So you guys can see the difference here between April and March. So what I'm trying to get across to you guys is that your risk to reward isn't going to be like it's not the end all be all. If you have a high win ratio and you can keep up that high win ratio, like I have proof here that I've kept the high win ratio over like a whole year, right? My win loss ratio here has been pretty high until I started trading. Like I started mixing in different strategies, of course. And that's why the win ratio here kind of changed a little bit. Like right here, you can see I have a negative win loss ratio. The win loss ratio is 48.9, but I was still profitable about 30 points because I mixed scalps here with breakout entries. So you guys can see like that you don't need to have a super crazy win-loss ratio, or you don't have to have a crazy risk reward. If your win-loss ratio is above 50% and you're doing a 1-to-1 every trade, you'll be perfectly fine. You can be profitable long term. If you're doing a 1-to-2, you just need 25%, but it starts to balance out. So the thing that I started to realize is like one thing that we noticed over the past couple months is that the market's been super choppy. So if you look at the stats from November, so we'll go from November to October. You can see here that my win-loss ratio kind of dropped a little bit, but I was mainly only taking momentum breakouts. So my win-loss ratio, like I said, you have to have above a 50%. I was at a 57.1% and my profit was 210. So even though my win-loss ratio was super low, I was still making the same amount of profit I was making earlier with a 93% win ratio. So I don't want you guys to be too caught up with with risk to reward or win-loss ratio. I think if you guys are not comfortable or not confident with your trading, then you probably want to go for the easier entries and aim for a 1-to-1, if not a negative. But you want to make sure that your win-loss ratio is high. Once you start to feel more comfortable, then you can do 1-to-2, or you can do 1-to-3 or 1-to-4. For me, my trading style and my trade psychology is that I like to win trades. I don't like to lose. Like everything that I've done in life, I don't like to lose at anything, right? So for me, I prefer to do a 1-to-1 to 2-to-1. But my win ratio has to be higher than 75 to 50%, which I'm fine with. I can do that. If you guys follow my trades for the past couple of weeks, if you look over here for my stats, you can see that I haven't lost a trade in a while. Like last week, we didn't lose any trades, 4 wins, 0 losses. The week before that, we had 3 wins, 1 loss. You can see my win-loss ratio is pretty high. So my recommendation for you, and everybody's going to be different, right? If you can't stand losing, then obviously stick to 1-to-1 or do a negative. But if you're okay with losing, like if you're okay to basically in lesser choice words is like if you're willing to eat shit, basically, then you can do a 1 to 2 or 1 to 3. You're going to lose a lot more trades. You're going to be at maybe a 25 to 50% win-loss ratio, and you're going to be losing a lot of trades. But when you do win, you're going to balance it back out for the most part. For me, I'm the opposite. I'd rather win trades and have smaller profit and have more trades, but then still balance out with a higher win-loss ratio. So for me, I'm more of this 1 to 1 to 2 to 1. I still aim for 1 to 2, but I have a trailing stop. So I usually get out at about 1 to 1 or 2 to 1. So this is the way that I personally like to trade. Again, you don't have to trade this way. If you want to trade with higher risk reward, just make sure that your win-loss ratio stays above a certain point. But if you guys have any more questions regarding risk management, feel free to hop into the chat. For the most part, your win-loss ratio, it's not going to matter too much based off whatever your trading plan is. If your trading plan is to win more trades, then your risk reward can be lower, but you have to have a higher win ratio. And then in the opposite, if you're using a strategy that has a low win rate, then obviously you have to go with the higher risk reward. So for the breakouts, I do higher risk reward. For the scalps, I do 1 to 1 to negative for the most part. Either way, I've done my statistics, so I understand that in the long run, I will be profitable. And it shows from this year. If you guys look at all my trades from this year, I've been profitable pretty much every month, except for May. May is the only month where I had a red month. And it was a slightly red as well. It was only down 20 points. But every trade I've taken this year has been documented here in spreadsheet. So that's about it for module 8, which is risk management. If you guys have any questions regarding that, feel free to hop into the chat. Everyone's going to have a different opinion, so it doesn't really matter. You just got to figure out what applies to you specifically. Some people are going to choose higher win rate. Some people are going to choose higher risk reward. You got to find your balance. My balance is between these risk rewards right here. 1 to 1, 1 to 2. I usually aim for 1 to 2 almost every time, but if I have to go negative, then it's fine. I have my trailing stop that usually stops me out. If you guys saw the trades from today, so let's take a look at the trades from today. So the trades from today, I took 2 trades. I took the breakout. So the breakout right here was for a 1 to 2. It was a 50-point stop loss with a 50-point stop loss with a 100-point TP. I got out at 1 to 1 at the 50-point mark. My trailing stop moved up. When price retraced back a little bit, it hit my trailing stop. I got out at 50 points. The reason why I have a trailing stop is because the market's been very choppy for the past 2 months. So I'm adapting with the market. Because the market's choppy, I have a trailing stop set at that point, and this is where I got out, 50 points. That's how I locked in this profit right here for 1,445, and I took this on the live session. The second trade I took today was the momentum reversal. You can see right here, this was also 1 to 2. So we had a 30-point stop loss, 60-point TP. Like I said, I used a trailing stop, so my trailing stop moved up at 10 points. And I got out at a 3 to 1, basically. So I got out at a 3 to 1 risk reward. You can see right here on my profits. My profits still added up pretty nicely across the board. So it just depends on the market conditions. I think as we move into the 2025 year with Trump in house, we'll have more volatility. So I'll probably adjust my trailing stop to something bigger, not at 10, but more so to maybe 15, maybe 30. So I'll guarantee 1 to 1, but I can still aim for 1 to 2. So it just depends on the market. Right now we're in a choppy market, so I have a tight stop loss. But over the next couple months, I will be adjusting that where I can go a little farther out. So yeah, if you guys have any questions regarding that, feel free to let me know. But like I said, usually I'm aiming for a 1 to 2. But I do have my trailing stop, so I usually get out at a 1 to 1 or a negative 2 to 1. Sometimes 3 to 1, kind of depends on the position. But for the most part, that is my risk reward, and that's my win rate for these specific entries. So that's about it for module 8. If you guys have any questions regarding this, feel free to hop into the chat. Otherwise, we'll move on to trade psychology. So I don't see any questions here. Let's move on to trade psychology. So moving over to module 9. For module 9 over here, these are the main issues that traders tend to run into, and I'll copy this and I'll put it over here on the chart. All right, so let me show you guys, and let me break it down right here. What I'll do over here is I'll just have this. It's a lot easier to see. So these are like the main issues that a lot of traders run into, especially if you're a new trader. So if you're a new trader, these are typically the problems that a lot of people run into. So looking over at the main issues, the first one that, and you guys have probably experienced this more than, more than everything else, is revenge trading. So the problem with this here is that, and let me show you the cycle real quick. You guys have seen the cycle before, but I'm going to show you guys again over here. This is usually what happens with most people who trade. So like here is the cycle that everyone kind of gets stuck in. So joins group, or we'll say starts trading. So usually this is the first step, right? Someone starts trading. The next thing is trading specific strategy. Just to be specific. So this is usually where everyone starts with. If they join the group, typically you guys will have either experience from trading somewhere else, or you'll be trading a specific strategy, and then you just start trading a specific strategy, right? So this is usually the first cycle. You start trading a specific strategy, whether it be price action, whether it be supply and demand, whether it be momentum like we trade here, trend trading, support resistance, etc. It doesn't matter what strategy you apply. This is usually where it starts. You start trading a specific strategy. What happens next is that start finding profitability. So this is like what I would say like the honeymoon stage of trading, right? You start trading a specific strategy. Like for example, if you just joined our group and you started seeing how I trade and you start to find profitability, this is like where you start to like your eyes start to open and you're like, okay, cool, this is a great strategy. I want to keep using this. What happens next is market kind of changed a little bit. This is kind of what happened between the spring season into the summer into the fall. So starts finding profitability, market changes a bit, strategy not as profitable, right? This is the cycle that everybody goes through. So they start trading a specific strategy, they start finding profitability, then market changes a bit, and the strategy is not as profitable. What happens here next is the cycle. So this is a cycle where things start to go downhill. What happens next is start to take shortcuts, more losses occur, right? So this is usually what happens. You'll start trading a strategy, you'll start finding profitability, the market changes a bit, and the strategy is not as profitable. Then what happens is you start to change the strategy a little bit. Like I'll give you guys a very basic strategy, and then what happens is you start adding your own rules to it, and then you start losing trades because you're taking shortcuts and more losses occur. When this happens right here, then start to doubt strategy. To new strategy. I don't mean like new strategy as in like same strategy type, but like a completely different strategy. Like this is what you see happen with a lot of people. Like they'll trade my strategy, which is momentum trend trading. they'll find profitability, they'll be super happy. Then the market changes. Market changes in season. So, like for example, if you trade from spring to summer, you're going to go from a volatile market to a slow market, right? And this is usually what happens. You'll go from a strategy, you'll find profitability, market will change a little bit. It starts to seem not as profitable. Then you start to take shortcuts. Like here's like one example, like, and I'll put the V1 variation strategy, right? I'll put the requirements here. Identify double body, double body, double wick off high low, and then confirm trend, confirm heading momentum. And I'm sure a lot of you guys have done this before. I even done it myself. Enter on close of double body or double body, double wick. So this is the V1 variation strategy. We've been applying the strategy for, I think, over 6 to 8 years now. We've been doing this for years. The same strategy, nothing's changed. So what happens with a lot of people is like you'll find entries and you'll win, right? You'll have like a good win streak. And then what happens is people start to, when you start losing trades, they start to take shortcuts. So what happens is a lot of people they'll stop confirming the trend. There's like one person on the live session that will typically take trades against the trend. I'm not against it, but that's not the strategy, right? That's when you start to take shortcuts. You know, if you start to take shortcuts, it's no longer the strategy. You're starting to take something else. Some people will not look for pending momentum because they'll see these entries come up and they're like, oh, there's entries coming up with that momentum. Why don't I just take all of them, right? So that's what I mean. You'll have a specific strategy of V1 variation. You'll start to find profitability. Market changes because it slows down. Then you start to take shortcuts and more losses occur. So what happens is they take off a couple of requirements here. You know, initially you're supposed to have the trend, have the momentum, and then soon enough, you're only looking for double body, double wicks. You don't care about the trend anymore. You don't care about momentum. And then what happens? Of course, you're not following the strategy and the strategy is going to lose. So using this as an example, you go in this cycle where you start trading the strategy, profitability, market changes, you take shortcuts, you accrue more losses, and then you start to doubt the strategy and move to a new strategy. What happens here is now you're confused. And this happens to everybody. Like, you know, if this has happened to you, don't feel bad because it's happened to everybody. It's just not a lot of people are willing to admit to it. And this is a cycle. Now confused about strategies, losing streak, blown account. What happens next? Blame strategy, blame mentor, problemless trader. Real problem, this trader not following rules. And this is why it's important that you guys have specific rules to follow. So here's like a cycle that literally everybody goes through. Whether people want to admit it or not, everybody goes through this cycle. It's always a blame game, right? It's never going to be the person who's making the mistakes. They're always going to blame someone or something. They're either going to blame the strategy or blame the mentor. Real problem is the trader not following rules. And then what happens here is it starts over. Never takes accountability, reset cycle. And this is a cycle that literally everybody goes through. I mean, whether you guys want to admit it or not, I'm pretty sure a lot of you guys have gone through this, or you know someone who's gone through this. And you see it in other groups. You'll see people, it doesn't matter if it's my group, someone else's group, you always see somebody blaming someone else except for themselves, right? So they start a new strategy, they find profitability, the market changes a bit, the market moves in season. So it'll move between winter, spring, summer, fall, and then back to winter. So like winter is usually kind of slow because of the holidays and it picks up at the new year. Then spring is like pretty smooth. Summer is pretty slow. And then it goes over to it's just a full cycle. It just goes back to it. It goes in a full circle. It goes like slow, busy, slow, busy. It's like every other season is kind of different. So the thing is, if you stick to your strategy, you're going to have some bad months, of course, but if you stick to your strategy, you're able to adapt with the market, you'll be able to you'll go back into your profitability. But this is the same cycle that everybody goes through. Start a specific strategy, doesn't matter what strategy, finds profitability, market changes, it's not as profitable. They start to take shortcuts, they lose trades, they start to doubt the strategy, move to a new strategy. They're now confused about the strategies. They go on a losing streak and they blow their account. Then they blame someone. They're looking for someone to point the finger at, right? Anyone but themselves. They want to blame the strategy, blame the mentor, blame the education, blame the market, blame the prop firm. I mean, that's like one of the biggest things. I see a lot of people blame the prop firms. But the thing is that prop firms never executed those trades. You executed those trades. So you're the problem. It's not the mentor, it's not the strategy, it's you. Because, like, for example, in the live sessions, I tell you when not to take certain trades. I'm like, this is a risky trade, don't take it. But some people still take it. Some people will take responsibility for it, but most people will just blame the person who told them not to take it. And like if you don't get over this right here, so if you don't get over the blame game, you're never going to be profitable. Like that's sad truth, because you're just going to go through this cycle, right? Trust me, I've been in the trading space for over 10 years. I've been trading for over 10 years. I've been mentoring for over 8 years. So I've been training people how to trade for over 8 years now. I've gone through, if you look at our community, there's over, like in my free education platform, like the free course, if you guys go to this website, go to the website, sign up for the free course, I have a list of everybody who signed up. I've basically helped over 7,000 people. So over those 7,000 people, if you could only imagine how many of these people I've ran into, there's been thousands of people who go through this. It's the same thing, right? It's not like this is my first time teaching people how to trade. I've been teaching people how to trade for years. And this is why I don't like teaching anymore, because the thing is, trading is not for everybody. You guys got to understand that. If you're willing to take the sacrifice and put in the work and really understand, you can be profitable trading. But the thing is, trading really isn't for everybody. I've taught thousands of people to date, and it's a stressful job, especially when you have to deal with people who like just want to blame everything. It's super annoying, and this is just what people go through. So what I would recommend is this is what you should do. If you can cut out all of this right here. So let me see if I could. Okay, so if you can cut this out right here. Let me color this a different color. So if you guys can just cut this out and cut this out right here, you guys can easily be a profitable trader. It doesn't matter what strategy you apply. If you apply my strategy or anybody else's strategy, just find one strategy that you like to apply and just stick to it. Like stick to it for a whole year. You got to go through all the seasons. Go through if like New Year's is in 2 days. If you guys find a strategy and just stick to that one strategy, do it the same thing all throughout the year. It doesn't matter if it's profitable or not profitable. I mean, it's got to be a profitable strategy. You can't just be doing some BS strategy. It has to be something that works. If you stick to one strategy, you find profitability. If the market changes a bit, just don't trade it as much, right? Just eat the losses and then trade it like every so often. If you don't take shortcuts and you don't doubt the strategy and you don't move to new strategies, you're never going to get confused, because why would you get confused if you're doing the same thing for a whole year straight, right? If you look at my strategies here, look at all the entries that I took. Momentum pullback scalp, breakout V3, V1 variation. These are all the same strategies. PRB, BV3, right? BV3, BB, market flow, market flow, market flow, market flow. All these, I stick to the same thing all throughout the whole year. Momentum breakout, V1 variation, etc. And you can see how profitable I've been over the year, because the thing is, I didn't change what I've been doing. I've been doing the same thing all year round. So my advice to you, whether you follow me or whether you follow anybody or you find your own strategy or whatever it is, my recommendation is find a strategy, stick to it, and stick to it for the whole year. Don't take any shortcuts, stick to your trading plan. Don't doubt the strategy. Don't move to a new strategy. Whether it be supply and demand, whether it be ICT, whatever it is, I don't care what you guys are applying. Just stick to one thing throughout the whole year, and I can almost guarantee you that you'll be profitable. Like, you're going to have months where things are going to suck. Like if you look at my stats here, like I started off the year really strong. January was a great month. 93% win ratio. February dropped a little bit. That's because I changed to breakouts more often. Same strategy, but just for breakouts. March picked up a little bit, back to 72%. April, back to 81%. May, this is my first red month. June, you can see over here, I picked it back up. I kept my win ratio above like 75% all throughout the year. 63%, 48%. I did a 1-to-1 there. And then you can see here that I just kind of changed a little bit. You'll see like my strategies don't work as well during the summer. You can see over here when it's a July, my win ratio dropped a little bit. I was still profitable, but my win ratio did drop a little bit. August, my win ratio dropped a lot, 48%, but I was still profitable by like one trade. September, so you can see here we go from September until fall. My win ratio picks back up. My profitability goes very high. So it goes from 48% to 73%. October, 51%, but I was doing a 1-to-1. November, 69%, almost 70%. And you can see it just adjusts. So yeah, if you guys have any questions regarding this, feel free to hop into the chat. I know a lot of you guys have like run into this issue, but if you guys can just cut out all of these things, if you can prevent yourself from taking shortcuts, if you can prevent yourself from changing to new strategies like every week or every month, if you can prevent yourself from getting confused about your strategies, if you're following one or two strategies, you shouldn't be getting confused because there's no confusion there. And then if you can stop blaming people and you take accountability for your losses, you'll do a lot better. You'll stay within this cycle. And for this cycle right here, I'll just go into just a repeating process right here, right? You'll trade a specific strategy, find profitability, lose a little bit, revise the strategy, profitability, lose a little bit, revise, profitability, lose a little bit. I mean, that's probably all I can tell you guys. But yeah, I mean, if you guys want to learn my strategies, so for today's live session, if you guys remember, we applied this strategy, which is the momentum reversal. And like I said, I'm going to try to focus on just these main strategies for 2025. So let me just put this over here real quick. Main strategies focus for 2025. It's going to be the V1 variation, V2 variation. These are all reversal patterns. I'm planning for the choppy markets that we have ahead of us. So momentum reversal. These are literally the strategies that I'm going to be focusing on, this and then the breakouts, of course. So these are the main strategies I'll be applying for 2025. If you want to take this journey with me, like literally all you want to do is focus on the V1 variation, momentum reversal, and momentum breakout. This will be your playbook for the year 2025. I'll almost guarantee, I can't guarantee you anything, of course. Trading, there's no guarantees. But if you follow just these 3 strategies for 2025, and I'm going to be trading these live with you every morning. So if you want to hop on the live session, it's on YouTube, it's free. Just look out for these entries, and I can give you, beyond like any doubt that I think these will, like, if you only apply these strategies, they're not going to come up all the time, but when they do come up, they're going to hit. These are going to come up too, but they don't come up very often. So the V2 variation, V3, these are a little more complicated. They come up, but they come up like maybe once a week. Same with the momentum reversal V2. These 3 strategies come up like maybe once a week. These will come up almost like every day. So if you don't like taking breakouts, that's fine. Scratch that idea and just focus on momentum reversal and V1 variation. If you guys focus on these 2 strategies right here, I think you guys will be golden. For the V1 variation, obviously it's like very simple, but I'm going to be using a confluence. I'm only going to take it if it's rejecting off liquidity. And if you guys do that, I think this is going to help a lot. So yeah, if you guys are ready to take this journey, remember not starting next year. I already started doing it today, but this is going to be my main focus. I'll keep drilling this into you guys, V1 variations and momentum reversals. I'm going to just stick to that. And then when we stick to that, we'll be sticking within this cycle right here. We'll stick to those specific strategies. We'll find profitability. Of course, we might lose a couple of trades, but then we're just going to go into that and just recycle. We're not going to take shortcuts. We're not going to doubt the strategy. We're not going to get confused. We're not going to blame anybody. We're just going to stick within this, take a trade, Win trades, lose a trade, take accountability. Win trades, lose trades, take accountability, etc. But yeah, I mean, that's mainly what we're going to be focusing on. So if you guys have any questions, feel free to hop into the chat, but that's all you really would need to focus on moving forward. So if you guys are hopping on the live session tomorrow, again, look for these two entries, V1 variations. I'll call them out and I'll explain them to you guys, but those are the main ones to follow, just those two right there. Yeah, Christian said, I feel so identified right now. I remember when FTMO gave me a limit of a month to pass the eval and it felt so much pressure in that moment that I started losing a lot. Yeah, so like what Christian said is the same thing here, right? So it goes back to this right here. So Christian felt pressure because he had to pass FTMO within a month, or like, he just, you would have to restart. So like, that's when he started taking shortcuts because he wanted to pass really quickly. That was a problem with FTMO in the past. You have to kind of YOLO the account, because if not, then you wouldn't pass. You have a 30-day time period. So yeah, I agree with you, Christian. FTMO, that was kind of it pressured you to take more trades, and then you would have to take shortcuts, and then you'd start to doubt your strategy, move to new strategy, you get confused, and then you just blow your account. And then you blame FTMO, or you blame, whoever you were following. But it's okay. I mean, that's part of the trading. And at least you understood that that was the problem, and then it wasn't you. Because now that you don't have a time limit, you can just stay within this circle over here. Yeah, Lila said it was a beast. FTMO was a beast. She said, even if you don't know what you're doing, follow the leader. If you follow Sean's directives, you won't lose. Just do what Sean does and it works. Just use smaller lot sizes. Yeah, I agree with you 100%, Lila. So like the thing with these prop firms, so specifically Tradeify, I would recommend, if you guys are looking for a prop firm to use. I know Apex is super cheap, but I would probably just do a straight to funded with Tradeify, because there's no time limit and then you're already funded. You have to pay a little more, but you're going to be straight to funded. So if you guys want to sign up for Tradeify, just go to the Discord channel, go to funding companies right here, scroll down, and then click on Tradeify right here. Click on Tradeify. This is the code right here. You basically can just pay to get straight to funded. So if you click on this right here, this is what Tradeify looks like. They're doing a 35% off right now if you want to pay for a straight to funded. So it's $6.99 for 150K account, but then you use the 35% off, it's going to go down to like maybe like 400 something. If you want to do straight to funded, 150K, you can go for a smaller account, but the thing with this is that if you do the math, it's cheaper to do this than to do Apex, realistically, unless you're doing a promo. Right now, Apex has a 90% promo, so it's another good time to do Apex. So right now, Apex would be cheaper, but if you're going to take more than 3 months to pass, it's going to be cheaper to just pay for it up front. Because if you're not going to pass in one day, then obviously Tradeify is going to make more sense. Because if you do the math for Apex, you have to pay, if you're paying full price, you're going to pay about $100. You do that for 3 months, that's 300, and then you got to pay the activation fee, which is like another 200. You're already paying like $500. You might as well just do a straight to funded here. It's like 4 something or 5 something. And then if you pay for this, you're already funded. You don't have to go through the whole eval phase. So yeah, if you guys want to, I would recommend just doing Tradeify. You can take your time with this. There's no limits. The only problem with this is that you do have to trade every week. Shouldn't be a problem. I'll be taking at least one trade per week. So you're not going to miss out on anything. You'll be able to take at least one trade per month on there. So should be good. Let's see, Christian said, my goal will be mastering the V1 variation and momentum reversals for 2025. Yeah, we'll go over some examples today too, before we get off this live session as well, to show you those entries so you know what to look for. So, all right, I think, so we covered that right there. Now let's go over, let's just go back to the main issues that I was talking about earlier. So a couple of the main issues that I mentioned here are revenge trading, right? This is one of the biggest things. So revenge trading is basically when you take a loss, you start to want to make that loss back, right? So say, for example, you take a trade. This is usually what happens with a lot of people. They'll like, yeah, I'll just take this. I won't put any indicators on the chart. I'll just show you guys like an example of this here. So say, for example, you're chasing a trade right here. And then say you like lost the trade. Say you're taking this for like a 50 to 100 like this, right? And then what happens here is that as soon as you lose that trade, instead of like taking a break and just like cooling down, you re-enter the trade right away. And then what happens is instead of just taking one loss, you end up taking two losses. And I think this is where it pisses people off the most is that when you take a trade, you lose a trade, you re-enter, you lose a trade again, and then it goes straight to your movement over here. And then you're like, oh man, I should have taken it right here. And what happens is you enter again like up here, and then you end up losing like three trades, right? I'm sure this has happened to a lot of you guys. This is what revenge trading is. It's like you lose, you take a trade, you lose, or let me just rewind it to here. Okay, so say for example, you took this trade right here, right? You took the trade and you lost. So what happens is you enter the trade again right here because you're like, oh, I just got unlucky. You just spiked me out on that. You're like, okay, I got unlucky. It comes down again, and then you lose again, and you're like, okay, whatever, the trade's not working for me. And then you see this push up, and this is where you start to get pissed off because you're like, oh crap, like I just got unlucky right here, right? But you could have gotten unlucky on the first one and just waited it out, but you took two trades here, so now you're at two losses. And then price climbs up higher, and then you're like, price is like way up here, and you're like, okay, at this point, price is definitely going to keep climbing. You enter again right here because you're like, okay, this is time to enter the trade. And then what happens here is you get stopped out again. And at this point, you probably blew your account, right? Because you're risking probably like 3% per trade or 1% per trade. So this is where revenge trading comes into play. It's a very common thing that happens with a lot of people. So my way to combat this, so in order for me to not revenge trade, what I typically do every day is once I have one loss, I'm done for the day. Like for my scalps, if I lose one scalping trade, I take max risk per trade, which is 1,500 per day. Like I did the math with you guys earlier. My max risk is 7,500, right? So I'm able to divide that by 5. So I risk 1,500 per day. So if I ever lose a trade, then I will typically just be done trading for the day. So in order for me to not revenge trade, and I'll put it right here, to avoid, just stop trading after loss limit. My loss limit is one loss allowed per day. Right? So if your problem is revenge trading, to avoid this, just stop trading after your loss limit, whether it be one trade, two trade, three trades. For me, I have one loss limit. Usually if I'm losing a trade, it's because the market's just not moving the way that I need to. So that's one thing right there. The other thing is over trading. So here's another thing that that happens with a lot of people. So and this is a good example right here. So let me show you something like this. So say price is coming down like this, and then you're like, oh yeah, I'm gonna take a sell here. Right. Just be like, oh, I took a sell here. So for example, say you take a sell right there, the trade hits, right? Price comes down further, like, okay, let me take another one right here. And that hits, and you're like, okay, let me take another one right here. Or what happens with a lot of people is they'll take these trades, but they'll just not put a stop loss. I mean, this usually happens with a lot of people. They'll be too confident. They'll be like way too overly confident with your position. And they're like, okay, let me take another one here. And then what happens is they have all these wins, and then a person will typically be like, okay, whatever, I'm going to keep winning these trades. So I'm just going to have a super, super far stop loss, but I'm going to try to keep going for the same entry. I'm trying to look for a loss here. Okay, so say there's another win right there, and then say they go again right here. Or we'll just put this as a regular one-to-one. And then again right here, another one-to-one. And then say this one loses. So what happens is this is where the over trading happens. You'll have a bunch of wins here, and then what happens is they want to keep entering more trades, so they just keep entering more sells here, and then they lose, and then they enter another sell here. And then they lose, and then they end up losing all of their trades. So they have like maybe 4 wins right here, and then they have 4 losses right here. And then they just keep going and going and going until they end up in a loss or they end up blowing their account. This is like where addiction and trading comes into play, right? A lot of people joke around about like being a degenerate trader, but there's so many people who trade like this. Like if you had, so in order to prevent over trading, to avoid, set a profit goal or trade goal for the day. And stop once goal is met. So for me personally, I try to reach like maybe 1 or 2 wins per day. I don't try to go for a lot of wins. Like if I have 1 or 2 wins for the day, I'm like pretty happy and I'm like, okay, because you can see across my account. So if you look at my accounts over here, I usually have, I've had 1 or 2 losses or 1 or 2 wins. Like this is just 1 win for the day, but I have a lot of accounts here, so it adds up very quickly. My total profit for the day for all of my accounts was about 12,405. So I only took 1 trade and it was a partial, and I locked in 12,405. So for me, I'm pretty happy with just having 1 or 2 trades per day. So if you're over trading is your problem, to avoid that, just set a profit goal or a trade goal for the day, whether it be $1,000, $100, $200. Whenever you hit that profit goal, then just stop trading for the day. Because usually if you keep trading and you follow that momentum, a lot of time you're just going to end up giving it back and then end up with some losses. That's like the common thing with a lot of people. So that's over trading. Over leveraging is when you take too big of a risk. Like say, for example, here, the same example that we were just talking about. Like say you took like 3 trades here and then you're just feeling super confident. So what happens is you just double up your contract size. Say you're using like 1 contract here, and then at this point, now you're risking like 10 contracts because you're like, oh, there's no way I could lose this trade. And then what happens is you end up losing the trade, and then you end up in such a deep hole that you end up in negative. Right? I'm sure this has happened to you guys a lot. You guys have taken like maybe right here, 1 con trade. Or like some people, I see them do this too. They'll just double up every time they have a 1 con trade, 2 con trade, 3 con trade. And then they end up taking like I don't know, for some reason this happens with a lot of people. They'll take like a 10 con trade, and that 1 trade where they increase their contract size, they just end up losing, and then they end up losing all the profits that they made, and they have a loss on top of it. So just don't let this be you guys. Understand your risks. So when you guys are trading your account, understand your risk. Like I said before, so for me, I can lose 7,500 before I blow my Apex or Tradify accounts, right? So for me, I can lose this much before I blow my account. So 7,500 divided by 5 equals 1,000 risk per day. I would need to lose 5 back-to-back losses to blow my account. I have a high win rate strategy, so this will typically never happen. I don't want to say never, but usually it doesn't happen. So I understand my risk. So I only take 6 contracts per trade. With 6 contracts, I'm risking 1,500 per trade. If I ever lose a scalp trade, then I'm done for the day. So you guys understand my plan right here? So this is what I mean about over leveraging. I never go over 6 contracts. If you guys look at my positioning here, I'm always going to have around the same profits, right? 400, my profits from last week, 600. Like you don't see my profits fluctuate. I don't have like crazy profits. They're always going to be around the same. Like you can see over here, my profits on that day, I was making like a couple $100, a couple $100 right here. You're not seeing me make like or lose a lot. See, on this day, I made 400, 500 per account. That was like a one-to-one. And if you guys look at my profits here, I'm pretty consistent with my profits. This is for the breakout, of course, it's different. But here are my scalps. I'm making around like 400 to 600 per trade. On a good day, I'm making 1,000 over, but for the most part, I'm making about the same. So I'm always risking the same amount and I'm not over leveraging. I'm using how much I need to use to risk my max risk for that day. So that's the other thing, over leveraging. The next thing that a lot of people have problems with, and here, let's see, to avoid over leveraging, have a set trading plan with set contract sizes and stop loss always. That's what you would do. So to avoid over leveraging, you would need to just have a set trading plan with a set contract size and stop loss. You don't change it. Just have whatever you have set. Don't try to like add contracts to it. Just have whatever you have set for that specific why is this? Yeah, have it set to like whatever you want to do every single day. Every day I have it set to 6 contracts, and then I have it set to a 60-point TP and a 30-point stop loss. Never changes. Only difference is that I have my trailing stop usually. And that's how you can avoid it. See, question from Christian. Christian said, so you have 6 trades to lose technically per account. Yeah, pretty much. And if you look at my stats over here, I never have 6 back-to-back losses, right? I might have 2 back-to-back losses sometimes, but never really 6. These are different though. So these were different because I was using something different I was taking lower risk during this period. This is a summer month. So during the summer month, I'm usually taking lower risk. But if you look on average here, like look at September, I usually don't have very many losses that are back to back. And these are different too, because these are breakout entries. But still, you'll see here I have 2 losses back to back, 2 losses back to back, 3 losses back to back. I don't have like 7 losses back to back. And usually during the summer, I usually lower my risk. So I can take more than 6 losses. Instead of taking 6, I'll have like maybe 7 or 10 losses back to back that are available. So those are the only times where I adjust my risk during the summer. And that's only because I know the market usually moves slower. Next thing is no trading plan, right? The problem with a lot of people is like they don't have a trading plan. Like I said, they're always changing their contract size, they're changing their strategy, they're changing their stop loss, they don't have a profit goal, they don't have a stop limit. Just have a trading plan, right? So to avoid this, your trading plan to avoid this, or just to avoid, have a set strategies, set contract size every trade, and set stop loss for every trade. If you guys can have this set up for every single trade you take, you guys should have no problem. Like really just have 1 or 2 strategies to follow. Have a contract size for every single trade you take. Don't go up, don't go down. Just keep it at that same contract size. And then have a set stop loss for every day. You know, if you don't change these things, you're going to have some sort of trading plan in play. And as long as it makes sense, then you should have no problem having any issues, and you shouldn't be blowing your account. So that's the best way to say it. You know, that's how you get away from the trading plan. The last thing here is focusing too much on other traders. So what happens with a lot of people, and you know, this is a hard thing to kind of like to tell people not to do. So what happens with a lot of new traders is that, like, say for example, you've never traded before, you've never seen profit. Say you go over here to the team profits and you see someone like Jonathan here locking in 2,500, right? And then you see him here the previous day, he locked in 3,000. And you see Jamie here, she's locking a couple $1,000. You see Jamie over here, S'more, she locked in like 4,000. The thing is, like, people are always wanting to compete with other people, right? You see Johnny here with 1,000, 1,700. You see people doing this, and what happens with a lot of people is like they end up wanting to not compete, but they want to keep up, right? It's like the keeping up with the Jones aspect of things. Like you just want to keep up with everybody, which is good. It's good. It's good that you want to keep up. But the problem is like a lot of people are always looking for that holy grail. Um, right? They have a trading plan, they have a set strategy, they have a set contract size. Like this is typically what happens. You'll have a set strategy, and then say, for example, you see Jamie here. I know what Jamie applies because she tells me. She says that she only applies liquidity. So what happens with a lot of people is they'll see people taking profits. What they'll do is they'll message Jamie, like they'll message her and say, "Hey Jamie, what strategy are you using?" And then she'll tell them like, "Oh, I'm using liquidity." What happens is a person who's trading the strategy, they don't trade liquidity, and all of a sudden they move from their strategy to liquidity because they see Jamie locking in profit, and then they end up losing trades because they're applying a strategy that they're not familiar with, right? Same with Jonathan over here. They're gonna be like, "Hey Jonathan," they're just gonna message him, and then be like, "Hey Jonathan, what strategy are you using to make those profits?" And this is the same exact message. I see people message people this all the time. "Hey Jonathan, what strategy are you using?" Jonathan, and I know what Jonathan's using because he's told me he only takes the breakouts, right? Like here's the common thing with a lot of people in the group who are profitable. They stay in their lane, like they stick to one strategy. Jonathan sticks to breakouts. That's what he's good at. Um, and he doesn't take anything else. All he does is take the breakouts. And then Jamie over here, she only takes liquidity, right? She's not good at anything else. She's good at liquidity, so she sticks to that. We go over here to Johnny. Johnny applies other strategies. He applies like breakout V3s. That's what he's good at, so he sticks to that. And so on with like everybody else here. So what I would recommend, guys, is like focus on one or two strategies. It doesn't have to be one that everybody uses, but just focus on one that you like, and you'll find profitability. Just have a trading plan, have a set strategy or strategies, one or two strategies, have a set contract size, have a set TP stop loss for every trade, and just stick to the game plan. If you stick to the game plan, I can almost guarantee, like, here's the trading plan that I would give you guys. If you want to be profitable in 2025, use focus. So if you want to be profitable in 2025 trading with Sean, this is your trading plan. Strategies. E1 variation with I'll just put V1 variation. There's going to be specific confluence that I'll be looking for. So V1 variation and momentum reversal. TP, stop loss, 60 points, TP, 30-point stop loss with trailing stop. And that's about it. Literally, that's it. So this would be your trading plan. And then loss limit, 1 loss per day allowed, and stop trading. Profit goal, 1 2 wins per day. And that's it. And then trading window. So guys, if you want to be profitable in 2025 trading with me, I like this is going to be my trading plan. So if you want to just follow this trading plan, like this is literally all you have to follow. Just follow these specific strategies. I'm going to be taking the breakout, but you guys don't have to take that. I know it's not for everybody. So we're going to focus on just mainly these two strategies, V1 variation, momentum reversal. Your TP stop loss is going to be 60-point TP, 30-point stop loss with trailing stop. So you're probably going to hit about like 10-point TPs to 30-point TPs to 60-point TPs around there. Loss limits once per day. This trading plan has been the same plan. The only difference here is that I've been doing this all year this year. The only difference is that the strategies kind of changed a little bit because of the market conditions. So I can't say that these are going to be the strategies forever, but recurring theme is that the V1 variation is always applied all throughout the year. So I think these two strategies will probably be the go-to all throughout the year. But again, if you want to be profitable and you just want to trade with me and do what I'm doing, like literally this is all you have to do. If you do this, if you guys want to take a screenshot of this, just copy this. But I'm going to be focusing on this every single day. And we'll be documenting all the trades. So if you want to be, and you can have a copy of my journal too. If you want to put these in your own trade journal and just document all your trades, I can almost guarantee if you document your trades and you only follow this, then you're good. Yeah, Satyam said triple confluence is also good. It's also good, but it doesn't come up very often. So like, you can add that to your list as well. But I just want to keep things simple. I just want to keep two strategies here so people don't get confused. Like Satyam said, like the triple confluence is a really good strategy too. If you know the strategy, you understand the strategy, you can add that. If you're okay with adding another strategy to your list, then add the triple confluence. But for the most part, if you follow these two, you should be perfectly fine. But yeah, thanks, Satyam, for reminding us. It's just that strategy. You have to be looking for it. Like today it came up, I think, twice, and I missed both of them because I wasn't paying attention to it. But yeah, if you guys follow this trading plan here, you guys will be perfectly fine. I would put money on it that like you'd be perfectly fine just applying these and using this as your training plan. So, all right, I think that's it for this specific module, guys. If you guys have any questions regarding this, I mean, we took a lot of time on this, so hopefully you guys understood and hopefully this was helpful to you. Like going back to what we had up here. Like again, going back to what we talked about up here, this is a cycle that a lot of people go through. If you can cut out this right here, if you can cut this out and you don't switch strategies and you don't blame anybody but yourself, I think you'll be perfectly fine. You'll go through some wins, you'll have some losses, you'll go back in the cycle, have some more wins, have some losses, go back in the cycle, and then it just keeps repeating itself. So yeah, that's pretty much it. Main strategies for 2025, V1 variation, momentum reversal. I'll be looking for these, but they don't come up very often. And again, yeah, if you want to follow that trading plan, guys, this here is the trading plan. Focus on these two strategies. This is your TP stop loss. It's a 1 to 2 risk to reward. It's a positive risk reward strategy, but you have your trailing stop. So you're going to get stopped out in profit more times than not. Loss limit is once per day. Profit goal is 1 or 2 wins per day. If you do the math here, so look at the wins here. If you do the math and you have 1 win per day, that's about 500, right? So if you do 500 per day and say you have 1 win per day, right? So you have times 4. That'd be 2,000 profit. Say you have 1 loss on 1 day, minus 1,500. You'll still be profitable 500 at the end of the week. And this is just one account. So you do this, you have 500, you multiply that by 4 weeks, that's 2,000 per month. And that's just one account. If you have 20 accounts, like, with Apex, that's 40,000, right? So you got to keep that in mind, and you can, these profits will multiply. If you have 1,000 for the month and you have 7 accounts with Tradeify, that's still 14,000 right there. So you just have to understand that like this is a long-term game, right? If you look at my stats for the year so far, I mean, these aren't the official profits that I made, but from all of our official trades during the live session, here are the stats. So here are the stats for the year so far. For this year of 2024, all the trades from January up until today, or until yesterday, we had 208 wins, 101 losses, total profit of 2,300 points, total gain of 136%. So if you're to do the math for that, like I said, if you're going to do the math with the YM equation we did earlier, so if you're doing 10 contracts, I'm doing 6 contracts. So let's do 6 contracts times 2,300. That's how many, or 6 times 5 times 2,300. So net profit per account would be about like 69,000. That's how much per account. So if you had 5 accounts, you'd lock in well over 6 figures. And that's for the whole year. These are all the trades that are documented from January up until December. So yeah, just use that as your goal in mind to be profitable. And then once you multiply accounts, you'll start to make more and more profit over time. So yeah, no problem, Christian. So thank you for so much for this valuable info. This is something that takes years to learn for traders. Yeah. So guys, again, if you want to be profitable for 2025, just stick to this game plan with me, and I can almost guarantee you guys are going to do well. Right. New Year's is in 2 days, so start that journal from January 1st up until December 31st of next year, and we'll see where you guys end up. I'll be keeping tabs on my stats as well. With that said, guys, we're done with this module. If you guys have any questions regarding this module, main issues with traders, feel free to pop in. Otherwise, we're going to wrap it up with how to trade like a business. So if you guys have any questions, feel free to hop in. Otherwise, we're going to move forward with how to trade like a business. Oh man, I took a lot of time on this module. I wasn't expecting to take that much time on this module, but I think this is really important that you guys understand, the main issues. And I didn't plan on giving you guys a trading plan, but again, like if you follow this, I think you guys will be golden, because this is what I'll be doing too. And again, like I said, if you do the math, guys, again, you do the math, right? 1 or 2 trades per day. Even if you're going for the minimal 10 points, if you're only making 500 per trade, and then say, for example, you have 6 trades that win for the week, that's 3,000. And say you have one loss, 1,500. That's about 1,500 per week per account. So you multiply that by 4, that's 6,000 for the month. You multiply it by 12, about 72,000. This is more than a lot of people make working a regular job, right? And then say you have 2 accounts. Say you have 2 Tradeify accounts. That's like minimum right there, times 2. That's over 6 figures from just trading in the morning between 6:30 and 8. So you just got to do the math. Like this is a long-term game. You're not going to see a lot of profit up front, but in the long term, you will see a lot of profits. And then you'll just get better and you'll start multiplying your accounts. So, all right, let me clean this up. So now we're going to go over how to trade like a business, how to treat trading like a business, right? Okay, so I think this is what a lot of people came here for today. There's a lot of different ways to do it. I'm going to show you how to do it with prop firms. I think prop firms are the best way to trade like a business. I mean, obviously you can do it a different way, or like you can trade your own personal account, but usually when you trade your personal account, you'll just go through your personal. But this is how you can trade like a business. So let's see, Brian's asking, can you go over how to deal with profit trading with a personal account with regard to taxes? Can you trade with a personal account under an S corp designation? Another question from Brian. Brian's asking, what consideration should we be mindful of when trading with a personal account with regard to tax obligations? So there's a couple of different ways to do that. Let's go over let's go over the way that Brian is asking first. So let me go over here first. Trading through so there's a couple different ways to do it. I'm trying to understand. Okay, so here let me and I gotta log out on my laptop. Keeps trying to log me in. Let me move this over. Um, Trading. So you would still have to have some sort of business, right? And I'll put the differences here. So I'll put the difference, trading via personal lives account. And I'll try to put the differences here. Because you still have to trade as a business. So trade under business. So I'll do this under business. Because if you're trading as an individual, you're trading as an individual. You're not trading as a business, right? Does that make sense? Like you have to choose one or the other. You're either trading as an individual or you're trading under a business. So when you're trading as an individual, no real tax benefits because you are an individual. Broker will provide you a 1099 designated as an individual contractor. So this is where you would trade it as a business. So if you're trading just personal, you don't have a business, you can't, like, there's no way you can do S corp designation because you're not a business, right? An S corp is, you're an S corporation, you're a business taxed as an S corp. You can't tax an individual yourself as an S corp because you're not a business, you're just an individual. So I think like you kind of have it. Well, I think this is what you're thinking of, but you would have to trade it as a business. So, and I'll put them over here. So trading as a business under business LLC, sole prop, or I'll do it in order. So sole prop, proprietorship. I don't know if I spelled that right. I'll just do sole prop or LLC. So receive tax benefits since operating as a business. Broker will provide you a 1099 business. LLC. And tax. That's good. So here are the differences between the two. So let's see. Brian said, I asked because prop trading allows for you to receive. I mean, you'll be paid a 1099 through the broker either way, because you're not an employee of the broker, right? You're trading with the broker. So I mean, I don't know if you've ever received, you always receive a 1099 if you make at least 600 in profit from a broker, they will send you a 1099. If they're regulated, if you're trading with a broker that's like overseas and unregulated, they're not going to give you a 1099 because everything's under the table. But when you're trading with like, say for example, if you're trading with NinjaTrader, they're going to give you a 1099. Like that's the only way they could give you it. Like if you've traded with any broker, if you trade with Robinhood and you made at least 600, they would give you a 1099. If you trade with Coinbase, if you trade with Charles Schwab, if you trade with TD Ameritrade, if you trade with Thinkorswim, if you trade with NinjaTrader, like any regulated broker in the US that's regulated by the US, they give you a 1099. You're not an employee of those brokers, right? You're just using their service and you're a contractor working with them. So like, I mean, the way that it works is you're trading, you're making the broker money, the broker's paying you out a withdrawal, right? Because that's your money. So they give you a 1099. It's not just prop firms that give you 1099, it's the broker, because you're never an employee for these brokers unless like you work for the broker. So they're not going to give you a W-2 if you made any money. Well, it's going to depend. So they might give you a K1. It depends on but it's usually going to be a 1099. So yeah, here's the difference. If you're trading live, like a personal account with NinjaTrader as an individual, you're not going to have tax benefits because they're just going to give you 1099 of like what they paid out to you. You'll be designated as an individual contractor, but you're still an individual, right? The difference is when you trade under a business, but you'll have to register for the account under the business. So you have to give them your business information, give them all the details and stuff like that. You can receive tax benefits since you're operating as a business. The broker will provide you, again, a 1099, but instead of it being addressed to Brian Nguyen, it's going to be addressed to Brian Nguyen's business, right? Not to you as an individual. You can get around this. So like, say, for example, if you registered as an individual, but then you have a business, you can take the 1099 and then you can deposit it to your your business account. And then you can just you can categorize that as business profits. So these are pretty much the same thing. It's just the difference is you're an individual here or you're a business sole prop. So if you're operating as a business, you can be taxed as an S corp, but you can't do that as an individual because you're not a company when you're an individual. So that's the difference between these two. Does that answer your question, Brian? I just want to make sure you get it because it's I know it's a little confusing if you don't understand the differences. Yeah, let me go over your questions again real quick, Brian, so I can make sure we're not missing anything. So basically you said, can you trade a personal account under an S corp designation? Yeah. So, back to your first part of the question, you have to trade under a business. So you're I think you just have to get this whole idea out of your mind. You're not going to trade as an individual. I mean, you can trade as an individual, but if you want to get any of those tax benefits, you have to trade under a business. So you have to sign up for you have to sign up for your live account or your personal account under the business name. Or if you do end up signing up as an individual, there's a loophole around it where you just end up depositing the funds to your business account. But at that point, you're still trading as a business. Pause it. So this is like the way to get around it. But I mean, in this situation, you might as well just register as a business at that point, right? You got to make a certain amount of money though. So like, you shouldn't be registering as business if you're not making money from the account. Like that's just another thing too. I feel like with a lot of people, they want to open a business account, but then they're not making any profits trading, and it's kind of pointless because you're paying a franchise fee here in California or wherever you're located, and you just end up you just end up like recycling money and you don't get any benefits from it. Because in order for you to get these deductions, you have to have like your business has to be making money. So that's another thing too. So like with a lot of people, I don't really tell people to like start a business yet. Usually you want to find profitability trading. Once you're profitable, then you should do it. Then you should open up the business because the thing is you're just gonna be racking up losses. And yeah, it's gonna be beneficial, but in a different sense, and we'll go over that shortly. But yeah, you should be profitable before you start opening it up as a business and trying to trade under the business. Let's see, Brian, can you hold a live account under a business? Yes. I mean, if you ever sign up for a live account, they ask you if you want an individual account, a business account, a Roth account, corporate account, etc. There's a ton of different accounts out there, but yes, you can register as a business, but you have to be a legitimate business. You can't just like pop up a random. You could technically open a business, but like they're going to ask you for a lot of information. They're going to ask you for an operating agreement, your address, some billing statements, some credit card statements. Like you can't be a random business like where you're just like, oh, I'm gonna set up a business and I'm gonna send this over to them because it's actually kind of difficult to set up as a business. They're gonna ask you for a lot of information, and it takes a while for them to actually verify that stuff. So yes. But what do you mean live account? Live account is a personal account. Here, let me just show you. Have you ever tried to open an account before? Brian? Let me see. Let me see if I can open one here so I can, okay, so I can't really open one here because I already have an account with Ninja, but you should go and try to open one and then you'll see because it'll give you all the, so if you ever try opening one, like I can't open one because you can only have one account with NinjaTrader, but if you open an account and then you try to sign up, it's gonna ask you here. Let me see if I can just maybe. I'm gonna use like one of my junk emails. Ah, fuck. It's now sending me the thing. All right, never mind. I was trying to do it, but now they're sending me the email. So I can't show you how to sign up for it, but what I would recommend is go sign up for an account and then understand the whole process. They're going to ask you a question whether you want to open an individual account, a business account, a Roth account, etc. There's so many different accounts you can open. But yeah, of course you can open a business account. It's not limited to individuals. There's a ton of businesses out there that trade under a business account, or you trade through a trust. There's a lot of different accounts you can have. There's a trust account, Roth account, investment account, business account, individual account, corporate account. I mean, whatever account you're looking for, there's a whole bunch of different ones. Let me see if I can find a website here. I mean, I use Schwab for my. Yeah, okay, so let me show you real quick. There's a ton of accounts here that shows you kind of a list of everything. Yeah, so right here, it shows accounts types, right? Brokerage, trading, retirement accounts, educational, custodial accounts, personal choice retirement, small business, accounts by financial goal. There's a ton of different accounts that you can open up here. If you want a business account, then you would just do, you just open an account and see here, it shows you all the popular accounts. You can do an individual brokerage account, which is going to be your personal. You can do a joint brokerage account if you have your wife or something that you want to do it with. You can do a Roth IRA, which is an investment account. You can do a traditional IRA, you can do rollover IRA. You can do trustee account. You can do, there's a ton of accounts here that you can open with. There's not just, you don't just sign up for like one account. You're like, okay, this is only individual. You have a ton of options that you can try with. So yeah, what I would recommend is, go to the website, try to sign up for an account, and then all the options will come up. I wish I could show you, but I already have like 2 accounts with Ninja, and I can't show you the whole process. But all right, let's go back to to this over here. So let me go and just start over. And I'll show you how to trade like a business. So when you trade like a business, and I'll show you the whole process. So typically this is how you start. You'll be an individual, right? Yeah, you're all good, Brian. But there's just like a quick response to your question, or I already answered it, but yeah, there are business accounts. There's a ton of different accounts that you can sign up for. You can get the tax deductions as an individual because you're not a business. You can't say, I have this business account, I need to buy this computer or something for trading to make money, but you're an individual and not a company. So yeah, for the most part, you would have to sign up as a business. It'd have to be a real business. It can't be some bootleg business that you just kind of like came up with. It can't be like some random e-commerce business that you signed up for before, and then you're like, oh, all of a sudden I want to do trading now. Like it's got to be a specific business that's like like because they're going to look through your credentials and stuff. Because what's going to happen is with a lot of these brokers is they'll offer you margin. So what they'll do is they'll pull up the credit from your business. They'll see, okay, this business has been around for like 5 or 10 years. They're reputable. They're making cash flow. They have money, so they're going to give you margin. So basically, margin is like they're going to lend you out money as like a loan where you can trade with. If your business hasn't been around for a while, then they might just give you no money, and then you can just put in your own money to trade with. So it kind of just depends on like what you set up with. But okay, let's go back to how to trade like a business. So here you are starting as an individual. Personal trading. All right, here, let me just, I'm trying to like understand like how can I explain this to you guys to make it as simple as possible. So let's see. Um, when you trade like a business, you can start taking deductions for trading expenses. So I'm just going to try to make it as simple as possible. I don't want to make it too complicated because it's really not that complicated. So like when you trade like a business, you can start taking deductions for trading expenses. So examples of trading expenses would be like computer used for trading. And then you can do like we'll say Kodi Kai strategies subscription, trading view subscription, data subscription, Apex trading valuations, Tradeify, valuations. Here's where it gets a little like more in the gray area. So home office expense, aka rent, home office utilities, aka utilities like water, gas, or let's say water, electricity. Water, electricity, internet, cell phone used for trading, accessories, etc. So when you trade like a business, you can take these deductions for trading expenses. So like basically all this stuff here can be deductions. You can write these things off. So like in a sense, you're getting this stuff for free. And let me explain here how business deductions work, trading like a business. So say you make, let's choose a whole number, 100,000 in profit from trading for 2024, right? So you make 100,000 in profit from trading in 2024. You will owe a tax liability, and I hate how this thing keeps coming up. It's so annoying. Okay, so you will owe tax liability of around, we'll say about 30%, depending on tax bracket. I mean, your tax bracket is going to depend on like how much money you make, but if you are trading futures, so here's the thing too with futures that a lot of people don't realize. Profits are taxed at 60-40 rule, meaning 60% of your profits taxed at long-term capital gains, right? And the remaining 40% is taxed at the short-term capital gain rate. So I mean, this stuff, it probably doesn't matter. You just like a lot of stuff won't even make sense to you, but the main thing that we're trying to talk about here is your tax liability, right? So if you made 100K and you owe 30%, we'll just say 30%. That's not a specific number, we'll say 30% in taxes, you will owe $30K at the end of the year, right? So this is how the business deductions work. Say you make 100,000 in profit from trading for 2024, you'll owe a tax liability of around 30% depending on your tax bracket. This stuff down here is not a big deal. The 60-40 rule, it just means that you'll keep more money. But so here's the example. So if you made 100K, you owe 30% in taxes. We're getting to the end of the year, right? So it's New Year's next tomorrow. So whatever you made between January 1st up until December 31st, you're gonna owe that in taxes. So if you made 100K and you owe 30% in taxes, your tax bill at the end of the year will be around 30,000, right? So in order for you to avoid paying I don't want to say avoid because you're not in order for you to keep most of the profits and not pay so much in taxes, take advantage of business deductions. Okay, so basically right here, you make 100K, you owe 30% in taxes. So at the end of the year, you have to owe about like 30K. So in order for you to keep the most of your profits and not pay so much in taxes, you take advantage of the business deductions. So here's where it gets a bit more it gets a little fun when it comes down to this. So say for example, the computer used for trading spent, well, let's say 3,000, right? Say for example, for the year for Kodi Kai subscription, spent 1,200. We're just gonna use big numbers here because I kind of want to tack down the tax liability as much as possible. Spend 1,200 data subscription. Say you spend 1,000. I know you're not going to spend 1,000 on data, but let's just put that there so that it'll be easy for you to. Okay, say for example, you did a ton of evaluations and you just sucked all year, but then you started doing well at the end, right? So you paid, we'll say you spent about like 5,000. 3 to 5 evaluations. So you spent like we'll say 5,000. Let's like okay, so for your rent, it's going to be depending on like how big your home office is. We'll say like the max is like 2,500. Let's say you spent 1,000 per month, so we'll do like 12,000. Home office and internet spent uh say like 500. Cell phone for trading spend 1,000. Accessories, we'll say you spend 1,000. Okay, so let's add this all up. Total expenses. Do the math real quick. So 3,000 plus 1,200 plus 1,200 plus 1,000 plus 5,000 plus 5,000 plus 1,200 plus 500 plus 2,000. Okay, so total for this, we'll just round it up to 20,000. I don't want to make it too complicated for you guys. So this is where it comes in handy. So total expenses here, if you're trading like a business, is you spend about 20,000 in like all of this extra on all this stuff that you paid for trading, right? But then your tax liability at end of year is 30,000, right? So if you spent 20,000 in all of your trading stuff and then you owe 30,000, new tax liability end of year is now only 10,000. You guys see how that makes sense? If you're trading as an individual, you can't write off all this stuff. So like at the end of the year, you're gonna have to just pay 30,000. So you're out of pocket about 30,000 and that goes to the IRS. If you're trading as a business, it'll cost you about like 500 bucks to set up a business or like, I mean, depends on what type of business or what you set up. It could be about like 500 to 1,000. And again, right here, you can even add that to your, so let's add that over here again. So business LLC setup spent We'll say we spent 2,000. Now this changes to 2,200, and now your tax liability is only 8,000. So you guys see how this it saves you money. So what happens is you're gonna have to spend this money up front, but you're basically getting this stuff for free in a sense, because what happens is instead of paying 30,000 at the end of the year, since you spend all this stuff on your business, you only have to pay about 8,000. So your goal at the end of the year, once you make enough money, is you want to spend enough money to basically balance it out. So at the end of the year, you don't have to owe any in taxes, right? So say, for example, you got the business LLC set up, and then let's say you got a new business car, right? Like for me, last year I bought a Porsche, right? I spent about 200,000 on this Porsche Taycan Turbo that I bought. And I used Section 179 of the tax law to write off the whole car because it's over 6,000 pounds. So say you want to buy a business vehicle. Say at the end of the year, say right now, it's December 30th, right? And you're like, oh, it's going to be New Year's tomorrow. So let me go buy a new car. Let me buy a car and let me spend the last of what I owe. So, and it has to be a business vehicle, right? It can't just be like some random vehicle. It has to be used for business, whether it's for marketing or whether it's for picking up your clients or whether it's for doing something specific. Say at the end of the year, you ended up buying a business vehicle and you paid 8,000, right? So you spent 8,000, and then what happens there now? If you spend 8,000 on that, then at this point now, if you spent 30,000 in total expenses, total business expenses, and your tax liability is 30,000, now you owe zero in taxes. So you just pull the Trump card basically. You know, you don't have to be a Trump supporter, but you pull the Trump card basically. You basically spent as much on your business that you owe in tax liability, and you made 100K. So instead of making 100K and then paying 30% in taxes or paying 30K in taxes, you now spent 30K in like stuff that you can use for business and personal to some extent, that you end up paying zero in taxes at the end of the year. So that's like how you trade like a business, and then you end up saving money this way. So I don't know if you guys understand how to set this up, but this stuff is like very simple. Like in order to set up a business, and if you guys have any questions regarding this, you know, feel free to hop into the chat, and then and then I'll answer any questions here. I'll show you how to set up the business, and then I'll offer my service if you guys want me to do it. A lot of people have been asking me to do it, so I usually don't do it, but I'll do it for people this year if people want to. If you want someone to like basically do like a white glove service where I do everything for you. I set up the business, I register your business, I set you up with the EIN, I set you up with setting up a bank account, business credit card, basically everything you need. But I'll put everything on here so that you guys can see what you guys have to do. Lila's asking, are you not allowed to claim any of these expenses unless you trade as a business? So I mean, you could technically, you'd have to register as like a sole prop. So there's three different types of businesses that you can different types of business entities you can operate under. So you can operate as a sole prop individual doing business as, or you can do it as an LLC, limited liability company. And then you can do LLC tax as S corp. So these are like levels of businesses. Like if you have like some sort of hobby and it doesn't make any money, probably want to be a sole prop, right? Once your business starts making money, it'll be an LLC. And then once you start making more money, then you'll elect to be taxed as an S corp. This is where you can hire yourself as an employee. Because initially, if you're a company, everything's going to be passed through and you won't necessarily get all the tax benefits. Once you make a certain amount of money, you can be taxed as an S corp, and then you can hire yourself as an employee. Like for me, for my company, I have Kodi Kai Trades. That's my company. It's taxed as an S corp. So I have the business. I'm the CEO, and I hire employees, and I'm the employee as well. So you get more tax benefits right here, but you don't really want to be taxed as an S corp unless you start to make like we'll say well above 75,000. If you don't make more than 75,000, stay in the LLC stage, and then you'll move up to S corp at some point in the future. But yeah, if you don't want to, so if you don't want to sign up as a business, you can just be a sole prop. This is usually for hobbies, right? If you're not making a lot of money, if you're making like less than a couple thousand, then you probably do sole prop. But yeah, if you're just an individual, so like, Lila, like if you're just Lila the individual trading, then no, you can't take deductions because you're not a business, right? Like there's no way to classify this as like you're using this stuff for specific business expenses. It's just Lila expenses at that point, right? Like you need to have it separated. That's why it's important to start up like an actual business, because if you don't start up an actual business, you can't have all this stuff separated. Like who's to argue that your Tradeify account is not for the business and it's just for you? But if you have it separate and it's under your business, like you charge all this stuff to your business accounts, then you're like it's easier to argue like, yeah, this is for the business. Like, why would I charge the business card if it's not for business, right? Why am I paying all these expenses through the business if it's not a business? So yeah, for the most part, you're not able to claim those expenses under you as an individual. You'd have to like register as one of these entities first, either sole prop, LLC, or an LLC taxes and S corp. Does that make sense, Lila? I know it sucks. It sucks if you're like just doing it as an individual because you're like, oh, I spent all this money on everything and like I want to write all this stuff off at the end of the year. But you can't. So here's the thing. Here's another thing. If you have like, say for example, you're a W-2 employee, right? Like say you're still working as a newscaster, Lila. Like say you're a newscaster. You're getting paid a W-2 salary, right? And then on that W-2, you're paying taxes on it, right? Say, for example, you have a W-2, and here's another, I'll put another description here. Tax benefit working as W-2, but having a side trading business. So, example, W-2, you get paid, we'll say like 100,000, right? We'll just use whole numbers here. They're easy to make. 100K, and taxes paid up front on paycheck is 25,000 for the year, right? Say, and then over here you have side business made zero money, netted a loss of 25K, right? So at the end of the year, your side business or I'll put this here, side trading business. So at the end of the year, your trading business losses flow to your personal. So what happens here is initially you paid up front 25K in taxes to your W-2 paycheck. Oops. So initially you paid up front 25K in your taxes to your W-2 paycheck. Since you reported 25K loss in side business, you will receive tax refund of 25K. So this is like this is a little trick that you can do. So like if you're working a regular job, like if you're whatever job you're working, if you're working as a employee anywhere, at say for example, you're a nurse, right? You're a nurse, you made 100K, you're trading on the side, but you lost like 25K in trading. So you pay 25K in your taxes because if you get a regular W-2 paycheck, you'll see in your paycheck like you're getting taxes taken off every year, every paycheck, right? Every time you get a paycheck, you're like, oh, this went to taxes, this went to Social Security, this went to healthcare, et cetera. If you lost 25K in your side business, it's going to flow to your personal. So at the end of the year, when you get your tax refund check, you're going to receive 25K in tax refund back to you. So like when I first started trading, I wasn't the best trader, right? I was working as an attorney and I was getting paid a pretty good amount, like 200K. So like I paid X amount in taxes, but because I was netting a loss out of my business, I ended up getting like a fat refund check at the end of the year because I'm getting the money back that I paid out through taxes through my W-2. So this is like another loophole. I wouldn't say loophole, but it's like another tax benefit of having a side business. So you can basically trade risk-free for the most part. I mean, I wouldn't say risk-free because you're still losing money, but yeah, this is another benefit of having, a side business, even though you're not good at trading yet, you're still able to like write stuff off along the way. Yeah, exactly. Lila said better safe than getting audited. Yeah, exactly. So yeah, you would have to, I mean, for the most part, you can't write this stuff off as a individual like you were asking before, but if you're as a business, that's why it's good to have things separate because the odds of you getting audited are very unlikely, right? Because you have everything kind of separated and it shows that okay, this is for business and then this is for individual stuff. So let's see, question over here from Nikki. Nikki is asking, what would the industry be called? I am putting my business through QuickBooks and I just put it under other finance, not accounting or bookkeeping. Even Chase wasn't sure. So I would put trading under, I would put it under professional services. Nikki, I wouldn't put trading at the bank because they won't open an account for you. Because the thing is, if you open an account with the bank, the thing is the bank trades too, so they're going to classify it as a conflict of interest. They don't want to open a business account if you're trading against them, right? So say, for example, you're a stocks trader and the bank is, say the bank has a bunch of stock in Apple, right? And you're shorting Apple. You're doing the opposite. You're betting on them to lose. They don't want to have you as a client because you're trading against them. So you're not good for business. So yeah, the industry that you would put it under would be professional services. I wouldn't put trading. You could put financial services maybe, but that's still going to be like it's still going to be it's going to be along the you're going to raise some flags. So I would say e-commerce. I mean, that's going to be along the lines too, because you're not really doing e-commerce. You're sort of doing e-commerce because you're trading online. But I would just say under professional services, that'd probably be the main thing. You don't want to tell them you're trading though, because if you tell them you're trading, they're not going to open the account for you. So I would do professional services, or you could do educational services too. I mean, it kind of falls under that too, because the thing is, like when you're trading for a prop firm, that's why I say to open it for a prop firm, and then you can still trade your own personal account or whatever. But with a prop firm, it's gonna be a little more easier to, I guess, get away with because when you're trading with a prop firm, you're kind of an educator in a sense because you're trading their accounts and you're kind of like what they're doing is they're pulling your data, right? Like if you think about the whole process of a prop firm is so prop firm. So you're kind of playing a game in a sense. Like this is you, prop trader, you, prop trader, playing virtual trading. Because the thing is, you're trading you're trading a demo account. So you're playing virtual trading. And then in a sense like this, the prop firm is the prop firm is the one that's actually trading. right? Because they're copying your trades to a live account. So prop firm, see how that makes sense? So you're kind of just playing a game. You're like you're some sort of an educator, or in a sense. I mean, again, it's a gray area. You're a prop trader, and you're kind of playing this game where you're trading a demo account. But the prop firm is like looking at what you're doing. If they like how you're playing the game, then they execute the actual trades on the exchange. So this could fall under you're basically doing you're offering professional service to essentially read chart candles. And that's like literally what you're doing. Your professional service is reading chart candles because you're not executing the trades on the live market. The prop firm is. So you, the prop trader, are playing virtual trading and you're offering professional service to read chart candles. That's what they're paying you for. Like when you request a payout, they're paying you because you're able to read chart candles. Like you're able to tell them like, hey, this is what I see in the chart. I see price going down. If you want to take the sell, go ahead and take the sell, right? So you can get away with being an educator because that's kind of what you're doing. You're being a specialist that understands how to read these charts and these candles, and you're basically telling a prop firm like, hey, I'm going to tell you that taking a sell here would be a good decision. And then what happens is the prop firm copies the trade and they execute the trade. So they have to classify as a trader. You're not the trader. You're a glorified prop trader or you're a virtual trader. So hopefully that makes sense. Does that make sense? Uh, if you guys are confused, I'm pretty sure it should make sense. But if it doesn't make sense, that's just kind of like what prop firm trading is. You're not really trading in a real market. I mean, you are trading, but in a sense, you're sort of just giving them a service, like you're a professional chart reader in a sense, versus you actually executing the trades like you would do in an actual account. That's why for me, I have different businesses. I have a different business for a prop firm. I have a different business for education. I have a different business for actual live trading because they all kind of fall under different categories. So yeah, Nikki says it does. I've been wondering for a year. Things totally make sense. Yeah, because I feel like a lot of people don't realize that when you're trading for a prop firm, you're not actually trading. You're providing services to read the charts. Like you're a professional at reading charts. You're not a professional trader. You're a professional at reading charts because you're not trading on a live market. You're trading on a virtual market since you're trading on a demo account. So like when you go to the bank, you could say that you're either doing professional services or you're a trading educator, right? Because that's really what you are. You're not a trader. I mean, it's not to say that you're not an actual trader, but if you look at things in a real aspect, you're not really trading. You're trading on a demo account, and you're offering services how to read candles, and you're acting as a trading educator. So, all right. Let me give you the steps real quick on how to set up the LLC, guys, and then we'll wrap this up for the day. We've been on this live session for over 2 hours. Thanks for you guys who are still on. I know we've been on this for a while. So here are the steps for setting up an LLC. So steps and requirements for setting up LLC. California specific, but should be similar in other states, countries. All right, so this is California specific, guys, because I'm in California. So basically, the first thing that you would do is set up LLC with state of secretary website. Set up and register. And if you guys want to write this stuff down, feel free. If you want to take a screenshot at the end, feel free. So set up and register LLC with state of secretary website. Step 2, file statement of information with state of secretary or secretary of state. 3, apply for business EIN. So these are like the main things. Once you guys have this set up right here, then I mean you're pretty much good to go at that point. So after that, then file business information. This is a new one right here. With BOI, FinCEN. If you don't, so this is the big thing. If you guys have a business, make sure that you file your business information with BOI by today. Because by next year, if you don't file this, they're gonna charge you like a monthly fee, and the monthly fee is like I think 5,000 a month. So yeah, if you have a business, or if you know anyone that has a business, make sure that they file this. This is a new law. It came out last year, and they're implementing it next year. So if you don't know about this, you should know about it. Not everybody knows about it. You're gonna be you're gonna have to pay crazy amount of fees. Okay, so let's see. We got that right there. Pay business franchising fee. This is California specific. In other states, they don't require franchising fee. This is like a dumb California tax. They just want to like tax people for no reason. But yeah, that's kind of what you have to do. 6, open business checking account. Check Discord for Chase Bank details. 7, open business credit cards. Yeah, check Discord for Chase Bank details. And that's about it. I mean, and once you have this, you're pretty much good. 8, open account with, let's see, what's the account with QuickBooks to record deductions and expenses. Find and you don't really need, so this is optional, but find tax professional to file taxes at end of year. I have referral. If you guys want to use my tax guy, my tax guy is good, but the thing with him is like you have to like know your tax write-offs and stuff. You basically what I do is I handle the books myself, and then I bring my books to my tax professional at the end of the year, and then he'll just confirm everything to make sure that I don't get audited. So if interested, I offer a full service to do this for you. Okay, so that's about it. So if you guys want to do this yourself, I mean, these are the steps for setting up an LLC. California specific, it's pretty similar in other states and other countries, but basically first what you'll do is you'll set up and register your LLC with the Secretary of State. This costs about like, I think like $80, like $80 to register your LLC with the Secretary of State. Then you have to file your statement of information with the Secretary of State. This is about $20. You have to do this within like the first couple of days of your business being approved. Then you apply for business EIN. Once you have this number, this is your tax ID number for your business. Then you can file your business information at the BOI FinCEN. And then after that, you'll pay for your franchising fee in California. It's about $500. I know it's steep. It sucks here in California, but that's just what you have to pay for it. There's no getting around it. Then you'll open a business checking account with, I use Chase, so I have the details in the Discord if you want to go here on our page. It explains over here under FAQs. Have all the business credit cards right here that I recommend. Then once you open your business credit cards, then you can open an account with QuickBooks. You use your business credit cards to pay for all business expenses. The cool thing with QuickBooks, it's about like 20 to 50 bucks a month, but what you can do is like you'll just link your credit card to it, and then all of your charges will be brought up under QuickBooks. And it's like such an easy way for your tax accountant to just check things off at the end of the year. And then if you want to have a tax professional, I do highly recommend you do so that you don't get audited. I do have a referral, so if you need anybody that needs to handle it, you would need to like put your books together, but it's not necessary. You just if your books aren't together, then he'll do it for you, but you have to pay an extra fee. It's probably best to just do it yourself. So these are the steps for setting up the business. It's not very difficult, but you want to do it proper the first time around. If you screw up on any of these steps, then you kind of screwed. You might have to just start a new business. You might have to just, dissolve that one and then start a new one. So if you guys want me to do this for you, I typically don't offer this, but I've been getting a lot of requests. So I will set up for certain people if you want me to do it for you. I haven't decided on the cost for it, but yeah, if you guys need help with this, just let me know and then I can do it for you. I'll set up the LLC for you. I'll register the LLC. I'll file your statement of information. I'll apply for your business EIN. I'll file for your business information with BOI, Vincent. I'll show you how to pay your franchising fee. I'll give you the steps with opening your checking account, your credit cards. I've done all this stuff before. Have multiple businesses, so like I know how to do this properly. I know how to do it in order. I know how to do everything so you get everything done proper, and your business will be running. If you wanted to look at my business online, you can. You can see that I've been in business since 2017, I believe, or 2019, and it's been like 5 years now, 5 or 6 years running the official Kodi Kai business. So yeah, if you guys have any questions regarding this, I think this is about it for the modules. We covered pretty much everything here. I wanted to cover the strategies, but we've been on this for a little too long, so I think it's time to wrap it up for the day. I'll cover the strategies probably tomorrow during the live session. But other than that, we've pretty much covered everything here that's really necessary. So if you guys are interested in this, or if you guys have any more questions, feel free to reach out. Otherwise, if there's anything else that you guys want me to cover, feel free to message me on Discord and I can cover it for you. But yeah, I think that's about it. So if you guys have any questions regarding this, hop in. Otherwise, I'll see you guys back here tomorrow for the next live session. So again, guys, remember, trading plan for tomorrow, if I can find it on here. Trading plan for tomorrow, do not forget. Did I delete it? I might have deleted it. Follow 2 strategies, V1 variation, momentum reversal, 1 loss allowed per day, proper risk, proper TP stop loss, profit goal of like 1 or 2 trades per day, and you should be good. So, tomorrow's the start. I mean, tomorrow's New Year's Eve, it's New Year's Eve, but we'll still stick to the game plan. So, all right, guys, I think that's going to be it for today. If you guys have any questions, feel free to reach out. Otherwise, we've been on this session for about almost 2.5 hours, and I think it's time to wrap it up. Losing my breath already from talking so much. But all right, guys, I think that's it. So if you guys have questions, reach out. Otherwise, I will see you guys back here tomorrow.